I'm Charlie from Chicago. I'm down here in Florida right now with the Simmons checks coming in. I was wondering what you thought about Barrick Gold, ticker symbol GOLD, and Happy New Year's.
Before we answer, Charlie, let's bring in, again, Capital founding partner and CNBC contributor John Kilduff. John, great to speak with you.
Same here, Melissa. Happy New Year to everybody, to you in particular.
Thank you very much, John. Happy New Year to you. What's your outlook for gold in 21?
Well, as the caller just referenced, we're getting stimulus this week. There's going to be extended unemployment. There's going to be more stimulus coming along, probably by the boatloads, and that can only help gold. It's already helping, obviously, Bitcoin. But I would just point out that gold is your father's Bitcoin, and it too shall rise in times of the prolific kind of spending and efforts by the federal government that are being undertaken right now, and by the Fed, of course. So with Barrick, you have not only exposure to gold, but you also have an exposure to copper, and both of those things that they produce are going to be pumped up by a weakening dollar that we're already seeing. A weakening dollar that's down double digits now on the year, that's going to be under assault from what the federal government and the Fed has no choice but to do in terms of supporting our economy and our fellow citizens. So it's sort of it's a great place to hide out. And I will say this as well, in terms of it being sort of your father's stock, Melissa. It has the kind of metrics that I grew up with in this market. It's got a 13 PE that is priced to earnings, not to sales or what have you, actual earnings. It's got a decent dividend yield of about 1.5%, and it's got this great exposure. I hope the party doesn't end for some of the stocks out there that trade at 100 times sales.
Yeah.
But if it does, a stock like this, like Barrick, is your insurance policy against the potential day of reckoning that could come.
Sure. So, John, a weak dollar is going to be the tailwind for all sorts of commodity trades. Going to 21, what's your favorite? I mean, if we overlay sort of the expectation that things are going to go back to normal, that things are going to be reopening, do you also want to pick a commodity, as you mentioned copper, that gets that sort of industrial boost as well as a tailwind in addition to the weak dollar? What's your favorite? I
do. Well, I mean, I think copper has priced in, much like the way the equity market has, a lot of hopefulness for next year. Look, I'm an oil guy, as you all know. I think that's probably the most undervalued commodity going here, as is things like gasoline and jet fuel and heating oil. So that really favors the refiners, who are going to do extremely well. But also, too, we talk in the heyday when crude was over $100 a barrel about high prices curing high prices. Well, these low prices that we've been through now for this past year are in the process of curing that as well. There's just tremendous underinvestment. There's a lot of retrenchment. I can easily see a lot of pain at the pump later in the year for consumers because of all the retrenchment in the industry. I think we're really setting ourselves up as a country and as a consumer-based economy for a blow to us at the pump, at the fuel pump. So I really think the place to sort of start, mining right now, besides gold, which I do think is still a good play as well, but is the crude oil, is the petroleum complex.
All right. John, always great to get your thoughts. Thank you.
Thank you, Mel. Have a great one.
You too. John Kilduff, again, Capital. Mike, John likes Barrick. Do you?
I do, absolutely. I've been long silver for most of the year, and part of the reason I got into silver originally was because at the time it had been underperforming gold. Now the opposite is true, so I'm going to be rotating my silver position into gold. People who aren't trading commodities directly via futures or options on futures can do that via GLD. GDX is another way to play it. I think a lot of the things that John was saying also are true for energy. And it's important to remember in the energy complex that sometimes you have a situation where, you have these supply-demand shifts, and that can create near-term supply shortages in the same way that you can have the big gluts like the ones that we saw earlier this year when WTI actually traded negative at one point. And so I think if you see demand spike considerably, you are going to see on the product side, as he was referencing, the potential for some, supply-demand imbalance, which would obviously be good for the refining space. So I like that play as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.